All right, guys, today is a scan for the 10th of August, and it is the normal Sunday scan. I've got my main watches and then a few others that I want to watch throughout the week. In my opinion, there was a slight shift of what was going on, what has been going on lately over the last 2 days, Thursday and Friday. So I want to just kind of keep that in mind going forward, just because sometimes you start to kind of push in the same manner that you had been, and it just doesn't work the same way, as well as liquidity might be a little bit different, right? So sometimes the tape is a little bit thinner, and there's only certain days that you can size in the manner that myself and many others have, depending on the current market environment, depending on how liquid particular names are. There was a lot of names with a lot of volume, but not necessarily the same amount of opportunities or the same amount of liquidity at key areas. And if you take something like, I think it was OPGN, OPGN, there was definitely a trade there, but it just wasn't as perfectly set up as what we've been used to. The other thing too is, especially for me, Thursday and Friday were kind of for me. There was no A plus type trades for right off the open, and typically I try to pull back and just kind of wait for things. But because I took a few other trades, I ended up missing something like GSX. I got a piece of it, but I was pretty excited about the potential on that one the prior days, and it just didn't happen. I was watching a couple other names. I was focused in on PSTV and a few other different things that I had from the night before, and it just shifted my focus enough to just not be able to participate in the manner that I wanted. So I want to remind myself that you don't need to always trade, and if it's not an A plus setup, then just put the brakes on and wait. And wait for those levels that you set. GSX, if I go back and look at all the triggers that hit, I got a trigger, in the 130s, 132, 131 reminder, 128, 125. And, I ended up getting there in the 120s, the high 120s, and wrote it down towards the 100s, but not in any size or capacity that I had originally wanted to participate in. So, and that main reason is because I was focused on other names that, I shouldn't have been. And a good example is SRNE, right? Not necessarily that it was a big loss or anything like that, but just like these small donations. The reason for that is Wednesday was like a major trade for me on it. So you kind of always want to go back to that well and Thursday might be the same, Friday might be the same. But I think the biggest thing with a situation, it might have been Tuesday the trade at this point, I forget, but the biggest thing for me to remember is that sometimes just take that trade, move on, take it off radar until it comes back up on your radar again, until it starts to set up in an A plus type manner. Otherwise, you will continually just kind of donate back. So I want to be cautious of that this week and just trade those A plusers as they come. When I used to do these videos early on, I talk about A pluses, once or twice, sometimes 3 to 4 times a month. It was once or twice, and then the market really heated up, and it was like 3 or 4 times per month. And then now it's, literally every single day. So, there's no reason to trade the C-rated type names, in my opinion. So it's okay to dabble in them, but if they're stealing your focus and you don't really feel confident, and just like the broadcast over the last 2 days, Thursday and Friday in the morning at 8:50 a.m., I was like, I don't feel confident about anything off the open. There isn't those A plusers. So that's kind of the sign to, pull it back, relax a little bit, and look for the right opportunity. Let's see. I hope this week we can get 5 more again of anybody that wants to try Avidity Fitness. It's free. We do Zoom workouts right in your own home. And so far it's been great. Zach's loving it, and a lot of people are DMing him. It's tough to get people to take that first step to do it, However, once they've done it, a lot of people have stayed on board and are showing up every single, Saturday, Sunday, and Tuesday and Thursday. So Tuesday and Thursday, 6 p.m. Saturday, Sunday, 9 a.m. And that's market time, East Coast. So, a couple things this week that happened. PSTV was monster. We've had an idea for the last 2 weeks for the scan. I mean, for the swing, and it's been on scan. I don't think it was on last Sundays, but it was on the Sunday before. Basically accumulating dips versus 250, and so I woke up and it was like $6, and I was up the most I've been up all year in the IRA. That was like gonna be the biggest trade, but the downside of E-Trade is you can't trade until 7 a.m. So the tough part with that was when it goes from 650s down to 460s, 450s, 440s, it's tough to know that you were just up X and just be comfortable slamming the bids. But that is the most important part. So that took me about 30 or 40 more cents to, kind of tell myself, hey, you got to just, cut it and reposition at some point. Otherwise, you're going to ride it all the way back down. So either way, awesome trade, but a lot of slippage. It's unfortunate, but that's part of trading. And the worst thing that you can do beyond that is overhold it. Market shifting, I talked about. Trading size, the importance of wish orders, right? So when you are trading more size, stuff like Overstock, stuff like GSX, in my opinion, and at least it's for me, when I get on the right side of a name, I start to maybe get not necessarily more biased, but kind of self-fulfilling, and you start to kind of believe, oh well, maybe it can go here, maybe it can go here, maybe it can go here. And when you have size, you can't be thinking about that. You need to kind of pick your spots. It should flush here, it should do this, it should do that, and actually have some orders out there potentially, or at least be ready to react when it does. For me, I like to have some orders out there just because when it does flush, I start thinking, oh, well, it came down to 98. Maybe it can go down to 95. Maybe it can go down to 88. And instead of taking that $3 or $4 flush on the air, you kind of sit there, and then meanwhile it snaps back up. So more often than not, I am happy that I actually filled the cover. And you have to remember that you can always re-add, right? So you can always re-add back into the position if you decide that it's staying heavy, if you decide that you think it's going lower. But more often than not, just like my rules with newsletters, 90% of the time I'm happy that I exited when a newsletter comes in, just because they bring in all kinds of sheep doing the same thing. Same thing with this. I'd rather have covers out there, not necessarily the whole thing, but a good portion of it. And then I can always reevaluate, re-add. Circuit halts this week I noticed was like a big thing. I mean, on anything. If it went into a circuit halt, they just like printed volume. So just be cautious taking a trade such as JAN or WHLM. There's a few others, but literally people are just scanning for these thin circuit halt or these thin names that can go into circuit halts. All of a sudden it opens up, goes into another circuit halt, and then it spends the rest of the day unwinding, right? So be cautious making decisions or getting FOMO of, oh, I'm going to miss the next one that goes to 50. So just something to be cautious of out there. As usual, Mondays usually are the tone for the week. Scan is scan, and I think there's going to be some good ideas and some good action tomorrow off of it. But we might wake up and we might have a 200, 300% winner, right? And we might have some other crazy action. We might have a situation like TDOC and LVGO where there's a merger and they, most of it's in stock. So it's going to be interesting to see how this works. But, on Monday, every Monday's crazy. But just remember that it does set the tone for the week. And so make sure you kind of get a feel for what's going on in the markets before you start, throwing shares out there. So let's get right into it. I guess I should probably pick a winner for this week. Let's do Sunday scan. Let's get a dip. And all right, so let's go with Luttita, Luttita, and we'll go with Glenn McBird. Luttita, you got Momo Trader's book. If you already have it, we can send a t-shirt. And Glenn, you got a t-shirt. So email me, webmaster@investorsunderground.com, and we'll get those shipped out. Let's jump right into scan. Also, before I forget, this week we did a flash sale, and it was just the people on our newsletter. So if you did not participate, if you are interested in becoming part of Investors Underground, checking it out, we've got some really good action, really good deals for, I think there's a couple slots left. So if you have any interest, check the description right under the video. Click description and you can see the link directly to it. That can get you guys started checking out IU, and if you have any questions ahead of time, reach out, and we're more than happy to help. So let's get into it. Like I said, CNDT, pretty monster move. We got some great volume. I did learn a thing or two about I never use these horizontal lines just because, like I said, I have it selected to record my my cursor, but for whatever reason it doesn't. But I learned that you can do the horizontal line, which I've always looked at it. I just never have really paid any attention to it. But I think that the main levels on a situation on a trade like this, I'm looking at 390s, and the reason for the 390s is just because I was trading it, and every time it came into the 390s, they kind of absorbed it, they soaked it up. So that will be my level. So if it's staying heavy at 390s, then I'm interested in potentially fading it. However, and let me just go back to the daily and move this down. If it breaks over this basically 420, 430 mark, then I'm interested in a potential long. And so the thought process there is, if you think about SRNE, we had the same conversation about it, right? And the same conversation was related to looking left and basically the 1310, 1320s kind of baseline, which was right around here, and the 1370s was the key. So when 1370s breaks, comes back, becomes support, that becomes a potential long. That becomes a potential squeezer. And that's exactly what happened. So that's kind of the thought process that I want to use with this CNDT, where there is potential that if it starts to base at 420, 430s, then we might have that second, squeeze out. But I do think we're going to have a 50 to 80, cent move. I don't know if we're going to get $1, $1.50. I was pretty excited about the potential of a dollar move. But I'm thinking that we'll be able to have a big share, 50 to 80 cent type move. And we'll see what happens. And so for right now, consolidation, but those are my two key levels. And I would wait until until 9:45, 10 a.m. Convinces me of which way I should be going. TRVN, jumping ahead of myself, they got approved late after hours. They did not do a PR yet, so you might still get some PR buyers. This one might be one of those situations. Again, we're in a different market right now. So it might be one of those situations where we get that retail sell-off, where it gaps up, everybody buys the headlines, everybody gets excited, and then we end up seeing that profit taking. It just starts to unwind and come in. So that's my thought. But we are in a different market. We are in 2020, and everybody may just keep on buying and buying and buying and buying, and we go to 5. So my immediate thoughts are dips, and if we're holding over the 360 line, be cautious. But as we start to extend over that 360 line, if we start to get 390s, 420s, 450s, I'm getting increasingly interested in the potential of a fade. So we'll see what happens with that. RKT was a great IPO. This one is, take advantage of the action, take advantage of the volume. Right now, the key levels, again, I can draw the horizontal lines just to make it a little bit easier, but you can see that it had pretty much some trouble right around the prior close line, right over here. I'll just put it a little lower so you can see it. And then the other level, for me anyway, is going to be under this level here, this 2330s, 2320s. That would be the only way that I would start to get patient and let the trade work. Otherwise, if I'm trading it and I nail a trade, I want to be covering into these flushes, right? You can see cover into the flush, cover into the flush, cover into the flush. Assume that it's going to hold that level. And then when it starts to prove and stay under that line, then I'm interested in potentially scaling in. But for now, I think it's safe to assume that, especially in the market we're in, recent IPO, day 2, it'll be day 3 on Monday. This is Robinhood's top, kind of IPO for at least the recent time. I mean, the number of accounts went up like crazy. So we'll see. But definitely I'll watch, assume that it's going to keep on going higher. But given this volume, I think we could have, still some more upside. But as those key levels start to either base or peak, that's where my bias starts to change. Shifting into the failed follow through, again, if you click the description and go to the link of the scan, you can see I break down scan into my main watches. So we just went over my main watches. So even though I go over more names, I'm still only watching a handful, 2, 3, 4 names. And then I set up price alerts for the rest. Failed follow through momentum, one of my favorite styles, right? So I love to short, I love to fade, the trade. The key level for me is going to be, just right around here and right around, right over here. So look left, prior tops. So in an ideal world, we gap up over, 109 towards 110, maybe a little higher, and then we kind of come back, and we should assume, so if we gap up, we should assume we're going to base at this prior level of resistance, which now could become support. We should assume that it's going to base there, and that way locks them in. If it starts to peak again, you can always rescale up a little bit more. So then we've got our good friend Overstock, which was great. This was an example of exactly what I was talking about. I was ready. I was thinking flush out to the mid-90s, and you did have that nice opportunity, which it went down to 97.20s from about 98.20s or so, quick. But then it snapped right back, and we're back to almost 100 relatively quickly. So quick $3 down, $3 up. If you're there to take advantage of it, great. If not, what happens is sometimes that brings out your stubbornness. At least it does for me, right? And instead of locking in, you're like, I was just up $3 more. I'll wait, and then it goes another 3, right? We all have been there. We've all done it. So that's why I like to have some wish orders out there. So for me, I think it's pretty easy just to kind of look left again. 105 is kind of the 105, 106 area, right around this area here, is the levels that I'm looking at. And then in order to get patient, I think it's pretty clear that you need to see 104 or so kind of peak. And the reason why I picked that level is just because this flush, and then they higher low here, higher low. So you had that outlier flush, that outlier washout, but in the end, it ended up kind of consolidating, holding a higher low, and continued on at that level, the 104 50s, or excuse me, the 150s. So I didn't mean to say 104, so just in case that's confusing. So 150s becomes the key level for the downside. 105, 105.50 becomes the key level for the upside. So the other thing too is you don't want to get too aggressive into that lower end, right? Because a lot of times you might get super aggressive, and then they just squeeze you out into the top end of that channel, and then it ends up fading. You were right anyway. But because you started to bring in emotions, you got squeezed out. Let's see. SRNE, I have on watch, but I have it on failed follow through momentum because I don't want to try to find the top. It was a huge trade, like I said a couple days ago. Just a monster midday flush out. It was Tuesday, right here. Nailed this move, and it was a major trade. And so this kind of starts to make you want to go back to the well. And then when you go back to the well, it slowly kind of takes away a little bit of your profit, a little bit, chipping away at a little bit at a time. So the key for me anyway is just to stay away, or at least trade minimal size compared to the day that it was an A+ setup. So higher the better. I already went over those key levels, but same thing. Just look left, look at where it was consolidating. You don't want to get too aggressive in any one way or the other. Otherwise, you're gonna probably get chopped out. FSLY, I'm gonna set some price alerts for this one. It did come back relatively well, but my thought here is that we might have, actually it looks like it came back after hours. It popped up quite a bit. So we might have a nice little gapper. But what I would be looking for is, this level right here, where that was probably the midday base before it unwound, and then maybe an extension into this level here. So when I do my scan, I would basically say 81, 82 is ideal, right? So ideally it gaps up to 81, 82, blow off, and then it starts to pull back. And the thought process here is that it's been pretty obvious that there is support right over here, right? So it's no-brainer. Just buy it every single time. So I'm starting to kind of think the opposite. If we start to see pressure, then it's very possible we see a nice unwind. Not to say that it won't go back up over 80s, but maybe they do that, flush out, get everybody out that is just trained to buy at this level, flush them out down to the low 70s, and then bring it back up and get up, 80, 81, 82, 85 again. So that is the reason I have that one on watch. And last but not least, on the failed fall through CLSK, I was there. It was a nice failed fall through momentum, but you can see that every single time it should have cracked, it didn't. So I think the obvious level for anybody to get biased in any manner whatsoever is 890s. And again, that was the level from early. That was the level from around 1 and 2. And you can see it started to go higher, low, and started to push out from there. So it was a fine trade. I was kind of leaning into the failed fall through momentum, and I ended up covering around 905 to 910 after it should have cracked 890s, but it didn't. So that is the key level for the downside. So basically on Monday, I would set a price alert 890s, just in case, it could go 10, it could go 11, 12, whatever. But at least when it does break 890s, I know that's probably going to unwind for a couple of days. Continuation side of trades, can't type it. Hi-ho, we talked about this one last week. And once again, they did the same thing on Friday. So maybe they're setting up for something crazy. Maybe they're not. Maybe we just get excited for no reason and it does nothing. But I'm going to be watching basically 430s, 440 level. If we go back a week, you can take a look at the, how it traded. And you can basically see that the base that they held it ended up becoming kind of the resistance. So this is really a very key level. So I would say 430s, 440s, if it starts to base, then pay attention, because maybe they're setting this thing up to do something in the near term. FLDM, bigger picture idea. I think you can see key levels for me, 780s, 8s. So I would want to risk towards 720, 750s. But probably about 750. I don't think I'd really want to own it if it was peaking at 750. When I say that, it doesn't mean I'm stopping out right at 750. Right? At over and under, I want to see how it reacts. If it starts to, rebound and fail at 750, rebound, fail 750, fail 45s, 40s, then I want to get out. But it's not just I'm out 750s. It's never like that. CBEO, this was a swing idea earlier in the week. Great move. I bought on the flushes. We had a nice flush down here. That's where I got involved. That's where I got interested. Nice breakout. The first day got me interested in it. It felt a little bit different than the prior days. So I've just been letting it work. And we'll see what happens. PBI, another long idea from Scan this week. Dips versus 5 was the idea. Now I'm thinking dips versus 6 until the trend stops working. THMO, another nice chart. Great setup. We've seen these before, right? Dips, they're starting to get absorbed. ABCD type setup on the daily, as well as ideally we get it on an intraday basis, and then that way a lot of times when you've got the ABCD setup intraday plus daily, you get a really nice breakout. Last but not least, Cbli. This one had a shoot up midday, nice rip. But basically 280s and 3s are the key levels. I'll set price alerts just because it's had a history of it. It had a big day here with 51 million shares. So you should always assume that it's not going to break that level. But in this market, if we get one of those gap ups and we're going, it's always possible. But the other thing to note is if we do get a huge gap up, always look left. Always look back to this candle with 50 million shares. So that way if it's gapping up 350 pre-market, you don't want to get bent before 430, but you can also put a little bit of conviction in the fact that it's probably going to peak there. Doesn't mean it will. Still need risk management, still need a plan, still need a stop. But it's a good area to kind of start and have at least a little bit conviction. It worked with Kodak, for a couple days, obviously before the crazy squeeze. But it's a good starting point until the flow shifts and over and over and over. And that's about it. 80TX I have as a potential liquidity trap. We talked about those before. On a prior scan, you can search for that. But as always, if you click the link, you can see I have a couple other staying familiar names. I will just set price alerts for those like JMIA, Yelp, Groupon. Groupon, I think we're going to have a great trade on. I just, I need to see the action. I need to set price alerts and go from there. Mist, which was a big squeezer a week or two ago, is slowly sneaking back. Plug. So there's a lot of good action, but I'm not trying to overload Scan. As usual, I try to put my main watches, which is my focus. I try to put some long ideas. I try to put some short ideas for failed follow through momentum, things like that. So am I trying to trade them all? No. I'm trying to provide different opportunities, my best thoughts for potential categories for different types of traders. One other note that I was thinking to this point is, I was talking to Josh Cherniak, who's one of the mods in IU, and he puts out a scan, but I was telling him the importance of looking at other people's scans. It doesn't matter if they're other services, it doesn't matter if they're just other moderators, IU, wherever they are, they're putting out their best stuff, right? Because it's their best. And this is my best. My main watches are my best main watches. Same thing with anybody else, Emil, Cody, Michelle, and there's a ton of other people that do it in other services, but or do it for free, right? So you should always look at people's best ideas because you could probably take one or two or three from different people, and it's them doing the work and you benefiting from it just because you took the time to kind of look at what they were looking at. And then the other thing too that I feel is great and an asset of IU, same thing I was talking to Josh about last night, was, if I know that he's watching XYZ and that's his main watch, at least I know that if and when it starts to interest him, he's probably going to mention it in the room. So it's one less thing for me to potentially watch. Obviously, I'd probably set price alerts, but I know when Josh mentioned it, I got to pull it up because I have a plan. I know that I wanted to short it if it did this. Okay, he mentioned it. All right, check it out. Is there a setup for you? No? Yes? And then make a decision from there. So Anyway, that's it for today. We will see you guys in the room. Again, if you guys have any questions, if you're looking to come on board at Investors Underground, click the description. There is a link. There is a flash sale. And we sent it out to only the list. So if you had not had a chance to see it, there are a few spots available. If you have any questions, as usual, leave a comment, leave a like, and that's it, guys. So we'll see you guys in the room.